All right, so I'm going to look at the analysis and some possible option strategies for this symbol. This is the VanEck Oil Services ETF, and you are looking at the weekly chart. On the bottom, we have these same cycle brackets. These are 22 bars in length, and as Slim mentioned, they are a drawing tool that helps us to visualize the money flows into and out of a symbol. Now you'll notice some vertical black dotted lines on the chart, and those show us where the cycles formed their trough relative to the ideal cycles shown by the cycle brackets. So you'll notice that these are fairly consistent. Over here on the right, we have blue vertical dashed lines, and those show the period of time around the next ideal cycle trough when we would expect this current intermediate cycle in OIH to form a low and begin to move up again into the rising phase of the next cycle. So that period of time runs from February 26th to April 5th. So we do still have some time to go. Another thing to notice in here is cycle configuration, and that is defined by whether or not a cycle ends higher or lower than where it began. So this cycle, the last one, is positively configured, having ended higher. The current cycle that we're in is negatively configured because it is lower than where it began, which was right here, having broken below this key cycle low support. Now, because we do still have some time to go before we would expect this cycle to end, the probabilities favor that bounces in here would fail. So for that reason, we have created this minor resistance zone. And if OIH were able to get up into that area, we would watch for a failure. Finally, notice our proprietary momentum indicator, the reversal scout. That's this green and purple ribbon on the chart. Green indicating positive momentum and purple indicating negative momentum. So it is currently showing negative momentum. So this is an overview on the weekly chart. Let's switch over to the daily chart and take a closer look. So here you'll see a series of negatively configured cycles, each ending lower than where they began. The current cycle 2 is now below where it started, having broken below that key cycle low support indicated by this red horizontal line. So on this chart too, we have created a minor resistance zone from which we would expect any rallies that might get up into this area to fail. Now the resistance zone is a declining one. It gets lower as OIH continues to move lower. Now, this daily cycle is broken into minor half cycles, and we are right at the time period when we might reasonably expect OIH to attempt a move up into the rising phase of this second minor half cycle. So that, as well as the dominant cycle, are due to form a low out here in early to mid-February. Now, in terms of momentum on the daily chart, we have two momentum indicators. First, the reversal scout again, and that is showing negative momentum. The second indicator is our proprietary slim ribbon that colors the candles red, green, or gray, depending on momentum conditions, and our candles are red, showing negative momentum. So our analysis shows a bearish bias in OIH as far as option strategies that we could employ to take advantage of this bias. My preference would be for a long premium strategy since the implied volatility in OIH at the present time is fairly low. So I would set some alerts to make myself aware of a bounce up into this zone, and then depending on your account size, you could either buy a put or a put debit spread. You would wait for a signal on the lower time frame charts, let's say the 2-hour chart, for a return to negative momentum as an entry signal. So if the implied volatility rose enough that short premium strategies became attractive, then maybe a short call spread into this cycle low timing period, which happens to coincide with the February monthly expiration cycles, might be something to consider. So if we do get a move up into the resistance zone or a spike in implied volatility in OIH, I will publish an options trade idea for our members.